What is going on? Welcome back to Trending Stocks. Today we need to talk to you about SoFi. So today had a pretty good bounce, not as high as I would have anticipated, but I feel like the market right now is divided. So I want to break it down on what that divide is, go over SoFi's data and everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So today it did go up 1.32%, especially for a stock to go down almost 13+% the day prior. There is some buying that does typically happen. So normally you see a bounce, but more than 1%. So this was a little low. And in general, SoFi did actually open relatively poorly because it started off very bad. They did put out some news. So that was this. So SoFi accelerated retirement with 2% matching. So that is double based on the news that came out. I think it was like a month and a half ago where it did indicate that they're going to be doing 1%. So that's a fairly good thing. And I feel like this is once again how you build a very big clientele, because you typically go where your investments are, including your pension and everything else. So the fact that SoFi is doing this is absolutely brilliant and most likely will yield in a couple quarters like a lot more member growth. But still, let me know your thoughts on that. When it comes down to this morning though, there was some relatively good data as far as ADP non-farm employment. So that did go up 164,000 versus a forecast of 115. So like I mentioned, the broader market is divided right now because over the last several days or trading days, there was a pullback as a result of just a lot of stocks and indexes being overbought. So they needed to cool off. So SoFi was kind of getting dragged down with that. But with this data being absolutely amazing, like the kind of market's conflicted. Like this data should really justify things to go higher, but yet a lot of stocks are overdone. So once again, you kind of have that divide as well. At the same time, a lot of analysts are coming out saying that now they're saying 2024, there is going to be a relatively modest recession. And just, I feel like analysts have turned very bearish over the last 2 days. And I feel like they're just piggybacking off of just the sentiment right now. And so again, I'm going to play this video near the tail end of the video, but I'm going to go over some data and everything else that you need to know. Starting off with shorts. Shorts did increase almost 71,000 shares today. 13.74% of the free float is being shorted and 122.88 million shares overall are being shorted. Cost to borrow average is 0.71%. As I've said, I do not see SoFi being a squeeze play. I'm just merely bringing this up just because it's a good benchmark. These individuals are the ones betting that SoFi is going to go down. To analyze what they are doing is a very good thing. So just more context to that. Options wise, so $6.11 million in calls being purchased versus $3.81 million in puts. Sentiment wise, 42% of all the options being done today was bullish. So over the last several days, the bullishness of the options for SoFi has been diminishing, and that's just because of a breakdown in SoFi's technicals. Of the call options that are being purchased, it is anticipated for it to be above 850, so even in comparison to the last several days, that has gone down. Looking at puts, surprisingly enough, like I'm not going to count this outlier right here because that was abnormal, the 650 strike price, but there's a large consensus that it is going to be below $8 by the end of next week. But still, this is kind of concerning, the fact that there was a lot of puts being purchased at the 650 strike price for January the 12th. So let me know your thoughts. And also on the side note, give yourself a shout out. Did you buy today? Did you sell? I did buy 200 more shares. I instantly sold a covered call. So if you don't know options, highly suggest doing research on them because they can be very beneficial, bigger picture. So I did buy some yesterday as well as a small amount today. So 200 shares. But moving on from here though, there has been no recent analyst ratings today. There was that one from yesterday that's been causing all of this damage to SoFi. Looking at for this upcoming Q4 earnings, oddly, an analyst is a little bit more optimistic. So it went from 570.25 million to 571.78 million. And that is for their upcoming Q4 earnings, which so far has not been announced. I could be wrong. A lot of people were saying that it's in the end of January and that has been scheduled, but based on this, I don't see them announcing any news whatsoever when the actual earnings is going to be. But regardless, let me know your thoughts on that in the comments below. So overall, based on some of the technicals, it is continuing to break down. So with it at 842, or at least closing at 842, it is trading between this S1 and the pivot. Similar to the Elliott wave, it does show 794 as being kind of the high end, essentially. So that might be the next stop for SoFi, just based on the technicals and just the retracement and whatever else. So 794 is going to be that next strong support that you'll want to watch for it to hold. Vice versa, 920 is going to be that next strong resistance. Kind of a wide gap, so just be comfortable with a lot of volatility in the short term. Number of retail investors today were selling, similar to the last several days, so they are either profit taking or just don't like the direction that SoFi is going, which once again is kind of good. You never need to fall in love with a stock, because as soon as you start to fall in love with a stock, you are becoming emotionally invested, and that is where you don't really think mentally what is correct. Because for instance, SoFi, even if you look back over what has been happening with it, just generally, it goes through some pretty good cycles. So it's very easy to tell, like you can easily buy and sell SoFi. So obviously you can do that route, or if you just are a long-term investor, you don't really care about the short-term price action, you could do that. That's the beauty of investing. You guys always do whatever you see fit is justified. Stochastic though, you do see a bearish sentiment, so deviation, red line above the blacks. So that overall as well is starting to really push it down, and it is at 55, so still somewhat neutral. It hasn't really cooled down as much as I feel like the broader market would anticipate, but if it does hit that 790 range, then stochastic and the technicals would have cooled off, so hopefully it'll bounce off of that and trend higher, but we'll just have to wait and see. When it comes down to this, I just wanted to play this quick video because they do talk on some expectations for 2024, and they do refer to this, so the FOMC meeting minutes, where they did really say that it might not be as soon as what a lot of people were anticipating, because prior to the meeting minutes coming out, there was about a 90% chance that there was going to be cuts in March of 2024, and now that has gone down to 70, and I did see another post, I think it's down to about 64% now. So a lot of people aren't necessarily as optimistic as they once were, because keep in mind, this is one of the major driving factors that caused the stocks to go up as fast as they did, because people were thinking that there's going to be like cuts like tomorrow. Obviously just figuratively, but still, once again, I'm going to play this quick video. Let me know your thoughts on SoFi and give yourself a shout out if you did buy or you sold. What did you do?
One of my next guests says we've already seen a series of mini recessions across different sectors, while the other says a broad but shallow contraction is likely ahead of us. Let's talk about it now with Julie Beal, Chief Market Strategist at Kayne Anderson Rudnick and a CNBC contributor, and Jay Bryson, Wells Fargo's Chief Economist. Welcome to you both. Jay, are you the one anticipating a downturn still?
Yeah, so Kelly, if I would say it's going to be a modest downturn. I mean, I think anyone would stress that. I mean, I don't think we're looking at a major pullback here in the economy, but we are starting to see some cracks in terms of consumer spending. And, you know, the Fed is still in restrictive territory. I think that puts some headwinds on growth, in the coming quarters.
All right. So what would you say that implies for, not that it's where you kind of have to make your calls, Jay, but so those expecting Fed rate cuts and maybe the March timeframe, are they right? But are they right because of the slowing economy?
You know, Kelly, I think March is a little bit premature at this point. I just, if you're looking through, reading through the minutes of the January FOMC meeting the other day, I just don't think they're at that point yet. I mean, I think something would really have to fall apart in the economy where you see a rate cut actually in March. Could we see one in May? Yeah, I think that's very possible to see one in May. But March at this point, I think, seems a little bit premature for me. But once they start moving, whether it's in May or wherever, I think they start to move pretty quickly at that point to bring rates down.
Julie, what do you think is going on with the market here? Is it reassessing rate cut? I mean, is it because the data is better than expected? Is it because it's worse than expected? Is it just everyone was on one side of the boat and now we're going to the other side? I mean, notably, the 10-year yield has moved up. What do you think is going on here as we turn the page on the year?
I think looking at the minutes, it's pretty clear that rate cuts in March, I agree, are pretty unlikely. If something really falls apart, that's probably going to be what drives a rate cut, and that's not good for equity markets, right, broadly speaking. But I also think that a lot of the buying that happened at year-end was pretty indiscriminate. It's sort of like when you're at Target, on December 23rd, and you're just trying to find something for, your cousin who you don't even really like that much. It's just buy whatever you can. And now I think people are recognizing that they need to be a little bit more discerning, particularly if interest rates remain a little bit higher and longer than we're expecting. And so I think people are looking back at what they own, and I think it's really the time to be very careful and selective about quality. It's so hard to predict what's going to happen. Think of where the Fed governors are right now for 2025. You have one of them at 5.5, and you have one at 2.5, right? So they're going to be very data dependent, and there's not really broad consensus on where rates are going with them.
So yeah, pretty interesting stuff. Keep in mind, a lot of these analysts are talking broad. So the hold market, I feel, I don't know if I'm not in love with SoFi, but I really do like the stock. And I feel like this upcoming earnings is going to set the trajectory for it for bigger and better things. So even though they're talking on how there might be a mild recession, I feel like based on a lot of SoFi's mitigating risks and what they have within their business, should have it fare better than the broader market. So regardless, I feel like it's getting dragged down prematurely. Let me know your thoughts. Don't forget to hit that thumbs up. And with all that said, I appreciate all of you watching.